Cisco Stock presented earnings and the stock went down immediately. However, it managed to climb up again. And on the year-to-date chart we see that Cisco is trading sideways. And Cisco stock reported an EPS of $0.87, beating analysis estimations by a small amount. Revenue was reported at $12.79 billion and also beat the analysis estimations. And people love Cisco stock for different reasons, and one of them is the dividend. And I understand why, with dividend yield at 3.1% and 12 consecutive years of dividend increases. But if we look at the total returns in the past 5 years, we see that Cisco stock massively underperforms the S&P 500, and this is including dividends. So could this be the perfect time to buy Cisco stock? Well, by the end of the video I will give you my 3 price targets, so make sure to stay tuned and see how I build up to these price targets. And more importantly, which price target is the most justified in my opinion. I'm very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So, what does Cisco do? Cisco Systems is the largest provider of networking equipment in the world and one of the largest software companies in the world as well. Its largest business are selling networking hardware and software and cybersecurity software like firewalls. In here we see the earnings summary with revenue reported at $12.8 billion, down 6% year over year. EPS reported at $0.87, down 1% year over year. The good part is that gross margin increased 280 bps year over year. The thing that I don't like here is the product orders decline of 12% year over year. In here we see the geographic breakdown for the revenue and gross margin. Americas is by far the biggest segment, however the gross margin is the lowest here. Compared to previous quarter, all margins are decreasing. However, year over year it still looks good. In here we see the revenue breakdown by category. Networking, the biggest segment, is down 12% year over year. To me this doesn't look any good. The second biggest segment, services, is increasing 4% year over year. Another thing that concerns me a lot is that product orders is decreasing big time. From a geo perspective and a customer market perspective we see big decreases year over year. For the upcoming quarter, Cisco expects to report a revenue in the range of $12.1 to $12.3 billion. This is lower than the revenue they just reported in the most recent quarter. The EPS will be in a range of $0.51 to $0.56, also lower versus the previous numbers. To me this doesn't look any good either. And now that we know a bit more about the company, it's time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analysis every week. And also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue with diving into the fundamentals. Cisco stock is a $201 billion market cap company. PE ratio is at 14. Indicating they could be undervalued right now. Later in this video I will show you my 3 price targets for Cisco stock, so make sure to watch until the end. And in the meantime, please let me know your thoughts on the current valuation on Cisco, and I'm also interested to hear your thoughts in general on this company. Revenue is at $59 billion, and in this graph we see that revenue went up and down in the long run, but in general it is going up. Most recently the revenue started to come down as we saw in the current earnings and future outlook. Margins are going up in the long run, and this is really important to me. With revenue going up and down a bit, you want the margins to increase. EPS is looking pretty good. In the long run it is going up, and I must say it is pretty consistent except for a couple of quarters of course. Analysis expected EPS will slowly increase in the coming years. We're looking at a low to mid single digit growth number on average. For the revenue, analysis expect pretty much the same. It's expected to hit $67 billion in 2028. Both estimates don't really look exciting, to be honest. Return on assets is sitting at 14.8%, which is a great number. Return on equity looks really good, and the most important number, return on invested capital, is sitting at 18%, which is a really great number. It is also higher versus the 5-year average, which is a good thing. Current ratio is at 1.47, which is a decent number. Nothing really special to mention here, to be honest. Right now Cisco has 11 billion in debt, and I prefer companies that can pay down at least a big chunk of their total debt with the total cash. Cisco has 25 billion in total cash, so they can't pay down all their debt, and this is something that I really like. However, it is still very important that free cash flow is growing, since this is used to pay down debt, of course, but also to buy back shares, pay dividends, and all other things. And here we see that free cash flow is going up in the long run, and to me this looks pretty decent. Shares outstanding are decreasing, which is something that I really like. When shares outstanding are decreasing, it increases your ownership in the company, increases the EPS, lowers the PE ratio, and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, dividend yield is sitting at 3.1%, which is a decent number. Annual payout is at $1.56 and payout ratio is around 40%. I prefer 50% or lower, so right now they have 60% left in cash to buy back shares, pay down debt, do acquisitions, and all other things. I think the number is not shown here because of the earnings they just released. The 5-year growth rate is at 3.4%, which is a low number. However, they increased the dividends for 12 years in a row. And if you take a look at these numbers, the dividends paid since 2012, you see that Cisco did increase the dividends at a slow pace. However, in the long run this really adds up. Payout ratio is a very important metric with dividends. It tells you if the dividends are safe. And here we see that payout ratio is really steady and consistent. I think because of the earnings we see a drop in this number. In this graph we see the expected dividends in 2024, 2025 and 2026. Of course this is an estimation and can be highly impacted by results, but it gives you a rough indication. It's expected to increase at a similar rate versus previous numbers. And overall these dividends look really good to me, but how about the historical returns? I decided to compare Cisco stock with the overall market, in this case the S&P 500. Next to that I added Juniper and Arista Networks. On the 5-year chart we see that Cisco had the lowest return with only 18%. And keep in mind this is including dividends. The S&P 500 is sitting at 98% return and Arista Networks returned 303%. On the 1-year chart things look pretty similar, with Cisco having the lowest return again, while Arista Networks is beating these stocks again with a big difference. On the 6-month chart it is again Arista Networks that is having the highest return. This time Juniper is pretty close with 37%. Cisco reported a -8% return. On the 1-month chart it is again Cisco that is having the lowest return here with -2%. Bottom line, Cisco was beaten in the long run and in the short run by the S&P 500 and 2 competitors. So could this be the perfect time to buy Cisco stock? Well, let's check the 3 price targets that I created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. For the revenue growth I'm filling in 2, 4 and 6%, based on historical performance, their own outlook, but also because of the analysis. For the profit margin I'm putting in 23, 24 and 25%. For the free cash flow margin I'm putting in slightly higher numbers. For the PE ratio I'm putting in 10, 12 and 14. For the price to free cash flow I'm putting in the same numbers again. My desired annual return is 12.5%, since I can get an easy 10% average annual return with owning an ETF. Right now Cisco stock is around $49. I hit analyze and we see a lot of red numbers. We have a low price target of $31 to $33. We have a mid price target of $40 to $42, and we have a high price target of $52 to $54. To me, the mid to high price target is the most justified here, meaning the stock is kinda in the middle of this range. So what do you think is the most justified price target here? Let me know in the comments down below. My final conclusion on Cisco is that I pretty much like every part of the business, except for the current growth numbers in terms of revenue. I think the future doesn't look that bad for Cisco, but they really need to start growing, either by improving the business or looking for acquisitions. They have enough cash on hand to do both options. From a dividend perspective, things look really good. You got a steady and consistent dividend paying company that keeps increasing the dividend. From a value point of view, things don't look that exciting. I think the company is kinda fairly valued right now, and that's mostly because of the lack of growth. And if you look at the returns in the past 5 years, I think that says it all about Cisco. However, I do think it's a great business, and I can't wait for the company to improve or start growing again. So that's why I keep them on my watch list and check them from time to time. And remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.